Hello, good morning, ladies and gentlemen. Can you see my screen? Can you hear my voice? Good morning, ladies and gentlemen. If you do, please confirm this by giving me a positive feedback. So I would like to see you comment hi in the comment section so that I can get a confirmation that we are good to go this morning. I would like to see some feedback, please. If you can see my screen and you can hear my voice, please type in hi in the comment section while I get prepared here for a beautiful day. All right, so what do we have right here in the comment section? Okay, 585, good morning to you. Thank you very much. Cast, good morning. How are you? Cast wants us to do USDJPY. Is that what you're saying? I don't understand what you mean by that. Okay. All right. Should I take this as a confirmation that we are good to go this morning? Okay, KDR44, thank you very, very much for that confirmation out there. 899, good morning. Thank you very much. 899 from Ghana. I can see a Ghanaian flag there. Dino, thank you very much. Thank you. All right, so let's take this as a positive feedback that we are good to go this morning. I'm pleased to welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host where we shall be evaluating, reviewing the financial market using technical parameters to identify potential trading opportunity ahead of the New York session today. And for those who are joining us for the first time, you are highly welcome on board, and so pleased to have you guys around. And what we simply do here on a daily basis is to gather here to review the financial market. Normally we have a series of pairs that we choose at the beginning of the week, which on this basis we deliberate upon these pairs, do follow up details on a daily basis through the course of the week. So we come here, review these pairs, do trade management, and then decide what to do ahead of the New York session every day. And I will implore that you stay tuned in, keep on watching. It may look overwhelming at first, but I assure you that with time you get to understand how this works, and you will be able to use the information you have gathered here as a yardstick to make your own individual decision on this pairs. So once again, you are welcome on board. So let's dive in to the business right now. And one thing you would have noticed since the beginning of the week is the fact that the market has been a little bit slow in most of the pairs that we have been monitoring, and there has been some huge traction in the downside for the US dollar as well, and the US oil is yet to really gain that traction following the OPEC Plus decision during the course of the week. So all of this we are going to be looking at, and then we shall be taking a position ahead of the new week. So grab your cup of coffee, grab your bottle of water, and let's dive into the market. So as usual, the first thing we normally do is to ensure that we keep tabs with the fundamental aspects of the market by checking the economic calendar to see if we do have any high impact macroeconomic event we want to be looking forward to. So the high impact event we look out for are events which will be affecting the instrument that we have been monitoring since the beginning of the week. And if you look at what we have here on the economic calendar for April 4th, that is Tuesday, that's today, we don't have any major event to look forward to as you can see here. So what we are going to be doing is to skip this aspect and dive into the chart using our technical skills to identify trading opportunities for us today. So as usual, let's dive in, and the first commodity we are going to be looking at this morning is the US oil. GDR 30240. I see your comment. Thank you. All right. So here we are on the 1 hour time frame of the US oil chart. So let me do some cleaning so that we can have a neater chart to review this morning. So here we go here. So what was our expectation during the live session yesterday? What did we see at the beginning of the week, and what was our plans ahead of the New York session? Now, if you look at this chart here on the 1 hour time frame, we have a couple of key structures which you obviously can see mapped out on the chart here. But the most important structure we are going to be focusing on is the nature of trading activities during the early hours of the week. So we saw how the week started at around the $80.50 level here after this huge bullish gap, which was a reflection of trading activity during the course of the weekend. So last week's trading session closed just right below the $76 level, and we saw how price resumed above the $80.50 level this week, giving us a huge gap of about 48 pips. And you all know why this has happened. I hope you did your research on the US oil fundamentals. As I told you yesterday that there was a meeting by amongst the OPEC Plus members on Sunday, and where they made a pledge of cutting oil production starting from the month of May through the end of the year, and the total is going to be amounting to about 1.66 million barrels per day, and this is about 3.66% of the total global demand, which is quite a whopping figure anyways. And from the look of things, if we look at and take this into consideration, we should be expecting a soaring of oil prices across the market, and we have seen some signals in that regard as we saw this bullish gap happen as a result of this event. However, since the beginning of this week, we saw the situation here where price action has been trapped between the $80.50 level and the $79 area to further emphasize the indecision in this particular market. And of course, if you have been with me on this live session, you know what we look out for whenever we identify this simple structure. We always remain patient to wait for price action to either break out of the resistance line for buying opportunity, or break down the support line for selling opportunity, and with stop orders placed at both ends so that we can catch any of this opportunity. We saw how price action broke out of the $80.50 level during the early hours of the New York session yesterday to trigger our buy position. And one thing you would have observed here throughout the last 24 hours is the fact that as soon as price broke out of the $80.50 level, all hopes that price action will gain huge momentum appear to have been negated here. As you can see, buyers are still trying as much as possible to gain that huge traction as expected here. As you can see how sellers have continued to negate all attempts. So we have been witnessing a struggle here in the last 18 hours as price action still remain just right around that $80.50 level to further emphasize that there is a level of indecision in this particular market. Though we are still on the profit side of this trade right now, as if you are taking advantage of that opportunity, you would currently be running with about 68 pips in profit at this particular point in time. So we shall continue to hold on to this bullish bias as long as price remain above the $80.50 level. So for everyone who are taking advantage of this opportunity, well done to you. Kudos to you for being on standby to have caught this move. So let's see how far this retracement phase is going to go. This bullish momentum is going to go. Now, another thing about this structure is this, especially for those who had missed out on this opportunity, we shall be deliberating, looking at the current market structure to see if the market will be presenting a second chance for a buy opportunity in this market. So what we are going to be doing first of all this morning is to map out what structures we want to be using to guide our trading activity for today. And what I did here this morning, after bringing out my line chart on the 1 hour time frame, I was able to figure out this higher lows which has been happening here since the early hours of yesterday. And when we connect the series of higher lows, we have this, I will be calling it a temporary bullish trend line in the meantime. Obviously, price has been bullish since the beginning of this week. So when we connect the series of higher lows here, we have that bullish trend line. So definitely we shall be using this trend line as a yardstick for trading activity today. And what do I mean by that? So what this simply means is that the trend line will continue to guide this bullish momentum. So as long as price remain above this bullish trend line, we shall feel comfortable in our buy position. But if price action at any point in time does a breakdown of the bullish trend line, then at this point we might be getting ready to join a momentum shift in this market. So for a trend continuation to the upside, and for those who had missed out the opportunity at the breakout of the $80.50 level, what do we think we can look out for to give us more confirmations to buy the US oil? Well, if you look at what has been happening here right above the $80.50 level since yesterday, you will see that the highest point price action has been so far is the $81.25 level, where we saw sell pressure resume about 4 hours ago this morning. And one thing we want to be doing here is to acknowledge that level, using it as another resistance point where a breakout of that structure will be giving us a confirmation to add more position to our existing trade. And if you are not yet in this trade, this will be a beautiful opportunity to join a trend continuation to the upside. So I would like to give the illustration here. So we having another buy breakout retest of that $81.25 level to enjoy that trend continuation to the upside. So this is what we shall be looking forward to buy the US oil for today. So we continue to look out for more opportunities at the breakout of the $81.25 level. Now, in as much as we look out for buying opportunities in this market, like you all know how we always position ourselves ahead of the New York session, we ensure that we take into consideration both perspectives, so that whenever the opposite of whatever we have decided here happens, we are also prepared and ready to be part of that move. So with the situation here, I told you earlier that the bullish trend line here will be our yardstick for trading activity, as it will be guiding our trading activity for today. So one thing we are going to be doing here is, if price ever breaks down the bullish trend line to the downside, I am breaking down that $80.50 level. At that point in time, we would have seen the first breakdown of this bullish trend line in the last 24 hours, and this could likely be a signal that we might be going bearish. Remember, I said the word might be going bearish, as we still need some confirmation to happen here to give us that confidence and leverage to join a trend continuation to the downside. So in that regard, we want to see some selling pressure, some bearish momentum build up around this area, which I think could reflect on the chart in the form of a retest of structure. So it could come back as a retest of the bullish trend line that was broken to the downside. We are selling pressure resuming below the structure could inside that wave to the downside, or we could have a breakdown retest of the $80.50 level. We are selling pressure right below the structure, will be welcoming that sell position. So let's keep this in mind too as well. I doubt if it will happen, but if it does happen, we want to be ready to be part of that move. And if we zoom out a little further to how price action started last week, you will see that we have a huge impulse leg here, which had moved price from the $72.50 level into the $81.25 area. And if you look at the structure from a technical standpoint, you would agree that the potential of a retracement phase is very possible here, as those who are taking advantage of the buy position right around this area might want to be doing some profit taking activity, and this might likely be the reason why we have been seeing this huge indecision phase here in this market, as people are not sure if they should let go of whatever they've made so far, or they want to be holding on to this position going forward. So we're still trying to test waters around this area, so we might likely see profit taking activities happen. So if a breakdown of that bullish trend line happens here, we might likely be getting ready for a retracement phase to the downside, which may come into the $76 level, or the bullish trend line here to inside the second wave of bullish momentum. So let's keep this in mind too as well. So if price action breaks down the $76 level, the $80.50 level, which also shares a confluence with that bullish trend line we just identified here this morning, we should be getting ready to join a move to the downside. So let's keep this in mind, and if you do have any questions whatsoever, feel free to drop your inquiries in the comment section. So these are my views here on the US oil. You want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. So that is that on the US oil, and I will be moving on to the next pair right now, and that is going to be the US Tech 100. And on the US Tech 100, we had a huge consolidation phase yesterday, and let's quickly run through how the week started for us on this option. So this is what we saw here at the beginning of the week. We saw this bearish gap here. If you look at this closely, you will see that this was where price action closed last week, just right around the 13,190 level, and we saw the resumption of price action around the 13,150. We saw rejection of that area, which was a sign that sellers are present around that level. Then we saw buy pressure resume around the $13,070 level, which gave us a beautiful flat channel, which obviously is what we always look out for at the beginning of the week in order to be able to position ourselves ahead of the New York session. And you all know what we look out for whenever we have this kind of channel. We want to see either a breakout of the channel to the upside or a breakdown of the channel to the downside for a trading opportunity. And what we saw here yesterday, after having our sell stop order placed at the support line, had a buy stop order placed at the resistance line here, we saw the trigger of the sell position here. And I hope that you moved your stop loss accordingly as soon as price action moved in our favor. And if you had done that, you will see that after the buy pressure resumed around the $13,040 level, we saw how price action took us out at break even on that position that we had here. So on that one there, we might have closed at a stop loss, moved our stop loss to entry point. So at worst case scenario, we had a break even at that point. But going forward into the early hours of today, we finally saw price action break out the 13,150 level to trigger our first buy position for the week. And what happened afterward was quite significant. As you can see here, price moved a whopping 80 pips in our direction with just one single candle at this point, and it has also broken out of a key structure here at the 13,190 level to set a bullish tone for this week. Remember, this was where price action closed last week, just around the 13,190, and with a breakout of 13,190 right now, I'm of the opinion that we might be going very bullish this week. And for those who had missed out on this opportunity, well, I'm of the opinion that if we follow our technical principles we should expect that at one point in time, price is likely going to come back and do a retest of the structure that was broken. So where the retest will happen right now is what we don't know. Will it be the 13,190 or will it be the 13,150 area? Now, the only way we can decipher or know if it's going to be any of the structure is it depends on the kind of pattern that happens around that area. So if price action drops to the downside and comes into the structure, what we want to be doing is to scale down to a much more lower time frame. It could be your 10 minutes, your 5 minutes time frame, your 3 minutes time frame. Look out for buying pressure around that area. So it could be something like a double bottom structure. Then if we start seeing attempt by the sellers, buyers negating selling momentum, that is, sellers find it difficult to break down the structure, then we'll see buy pressure above this level. Then we could be in for another wave of bullish momentum. If that is not the case, and instead of rejecting the 13,190, price action drops further to the downside, then we have another bust up here at the 13,150 level, where a retest of that structure should be welcoming a buy position in this market. So these are the things we are going to be looking forward to today. And for those who are taking advantage of these buy positions at the breakout of these two key structures, I will be advising you right now to move your stop loss to secure this current position, as we never can tell what could happen here. The market is very fluid and we also want to be as fluid as possible. So if this breakout happens, it could always turn out to be a false breakout. So we want to ensure that we secure this position by moving our stop loss accordingly while we continue to monitor price action from this current level. So let's be on standby for this and let's wait and see if we are going to be having a retest of structure so that we can add more position to our existing trade. But before I close here on the US tech, I think it is important that we take a look at the holistic of the daily time frame to have an holistic point of view of what is really going on here, so that we can also be confirm that whatever position we are taking here is actually valid. So in that regard, I will be scaling up into the daily time frame. So let's see what is really going on this chart. And if we scale up into the daily time frame, what do we see? Now on the daily time frame, I told us all yesterday how it is very obvious here that price action has been bearish, and in fact throughout the course of last year's trading session, we had a situation where price had continued to find lower highs, and when we connected the series of lower highs, we saw this beautiful bearish trend line which has been supporting this bearish momentum. However, as soon as price got into that area around the 10,500 level, we begin to see accumulation of buy pressure, and this finally led to the breakout of that level here at the beginning of the year. And since the beginning of this year, we have seen a situation here where price action had continued to find higher highs and higher lows. So we had the first impulse leg for the year around this area, and as soon as price got into that 12,800 level, we saw how sellers came in, and in fact this level has been a strong determinant for selling pressure in the past. So following the impulsive move, we saw a retracement into structure. Then we saw the second leg began here at the beginning of this month, and price action appears to be continuing to the upside. And from a long-term perspective, if we take the structure into consideration, we want to be having our TP target sitting somewhere around between the 127.2 and the 1414 of the Fibonacci extension 2. So if we run the Fibonacci extension 2 here, we should be having our TP target somewhere between the 1414 and the 127.20%. So TP target somewhere around here. On a long-term perspective, I place this right inside the center of the box, and then I give this box a yellow color to make it a little bit clearer. and you will see that this area also shares a beautiful confluence with that 13,800 level, which happened to be a strong selling niche in the past year. You see what happened around this area in the month of August. As soon as price got into that level, we saw selling pressure resume around that area, and now with a TP target sitting around that area as well, which also shares a confluence with the resistant line of that ascending channel that we have here. So let's see how far this bullish momentum is going to go. So it's still looking very bullish, and the structure we have on the 1 hour time frame is supporting this expectation. So let's ensure we move our stop loss accordingly to lock in some profit here. So that is that on the US tech for today. If you have any questions, feel free to drop your inquiries in the comment section. So that's the 1 hour time frame right now. And okay, so I think that is that on this one. So let's just keep monitoring price action here. Anywhere above the 13,150 level still holds on our bullish buyers in this market. If you have questions, let me know in the comment section. I can see 4114 keeps saying hi here. Well, I see you. I acknowledge you. Good morning. And thank you. 697 says cool, and 896 says nice. All right, I'll take that as a compliment. So in that regard, in the absence of no questions, I want to assume that we are good to move into the next pair. So the next pair we treated yesterday was the XAUUSD, and what is our expectation on the XAUUSD since the beginning of yesterday? Well, situations here has been a little bit on the what will I put it, a little bit choppy in one way or the other. And one thing we observed at the beginning of the week was that price action started at around the 1,971 level, as you can see here. So that was our resistance point for the week. Then we had the support line for the week at the $1,957.50 level. And after we had cited the breakdown of the structure yesterday, we were of the opinion that this might likely be a bearish signal. And one thing we wanted to wait for is price action to either retest the structure, probably respect the resistant line one more time, since we saw sudden pressure resume around this area at the beginning of the week. So we were thinking that price action will find selling pressure around the 1,971, but that was not the case here, as we saw how price broke out of that structure with an engulfing bullish candle in that regard. And one thing I did here during our live session yesterday was to scale down to a much more lower time frame, where we were able to identify an important structure which has a significant confluence that we needed to use to guide our trading activity yesterday, and that was on the 30 minutes time frame. Now, I'm back on the 30 minutes time frame, and with this structure here, I told us yesterday to screenshot this chart, as we shall be using it to guide our trading activity for yesterday. And if you look at what we saw here on the 30 minutes time frame, we had two structures here. The first one is the 1,965, which happened to be a key determinant of price action. Look at what happened here last week, Thursday. We saw buy pressure resume as soon as price got into the 1,965. Then we saw the breakdown of the 1,965 on Friday last week's trading session to give us a clue that sellers might likely come in. And I told us all yesterday, following a technical expectation, there is a theoretical understanding that whenever we have price action break down a key significant structure, we expect that price will come back and do that retest of structure here to incite a trend continuation in the direction of the prior leading price action. And this confirms that it's not all the time price action does this. As you can see, we saw price action break above the 1,965, break out of this trend line here, which I also mentioned that we are going to be using to guide our trading activity for yesterday, to give us a beautiful bullish signal to join a trend continuation to the upside. And if you had actually did this, you will have moved with the price action, as price moved over 240 pips in our direction before we started witnessing selling pressure around the 1990 level. And since then, price action appeared to have been dropping to the downside, finding lower lows, lower highs, lower lows. But we had lower lows here, then we had a lower high, which is not yet evident yet. And the only thing that will confirm that price action will continue to the downside is only if we have a breakdown of the 1978. So during the early hours of today, this was what I spotted on the chart following the bearish impulsive move to the downside here since the test of the 1990. So what I did here first of all was to connect the series of lower highs, acknowledging the fact that price action has been bearish since the later part of the New York session yesterday. So we have this bearish trend line mapped out here. Then another thing I saw here since the early hours of today was how price action was caught within a consolidation phase between the 1982 and the 1978. And you all know what we look out for whenever we have this kind of simple channel. We want to see price action either break down the support line for a sell position or break out of the resistance line for buying opportunity. And as a result of this, we have a breakout of the 1982, which triggered a buy stop order there for me, and price action has been continuing to the upside, though the move is not to be significant at this point in time. And if you are taking advantage of this move as well, well done to you for being on standby to catch that move. So right now we want to see how far this momentum is going to go. Will it continue to the upside, or are we going to be seeing this as a false breakout where price action could still drop further to the downside? So these are things that we are going to be looking at today. And how do we intend to be part of this move? Well, for me at this particular junction, and considering the fact that we already have a breakout of this bearish trend line here, followed by the bullish momentum by pressure around the 1978, I'm of the opinion that price action may continue to the upside. So even if price action drops below the 1980, we might be seeing price action come back here, buy pressure, resume one more time to incite that move to the upside. So we don't need to be worried. So let's have our stop loss right below the previous structure with about 50 pips in that regard, and let's see how far this momentum is going to go. So on the XAUUSD today, we're looking forward to bullish momentum here. So we also have a structure at the 1990, where a breakout of that level will also be welcoming additional position to our existing trade. So that is how we're going to hold on to a bullish bias here. So anything above the 1982 seems most appropriate to be buying the XAUUSD for today. However, if price action drops below the 1978 to the downside, then I would have no choice than to start looking for selling opportunity. As a breakdown of that level, hold on a second please, let me highlight this out here. Okay, sorry about that. Okay, so we have the 1978, and the reason why I said if price action drops below that structure we shall be selling the XAUUSD is if you look at what has been happening here since the New York session yesterday, you will see how the 1978 has been a strong buying niche in this market. So it has been negating all selling pressure in this market. As you can see, sellers has been finding it very, very difficult to break down that structure. So if it so happens that price action takes out this buy position, the buy positions here, then we would have seen all the buy positions here being taken out, giving out some liquidity, which will reflect on the chart in the form of a retest of structure, probably on our lower time frame, to give us more confirmation to be part of that bearish move to the downside. So for today on the XAUUSD, we are not going to be selling unless we see price action take out all the buy position at the 1,978. So that is how we are going to be selling this one. So we still hold on to a bullish bias here, and to further help us to guide our bullish momentum here, we want to be connecting the series of higher lows. As you can see, we have higher lows on this chart right now, which we can use to guide our trading activity. So I will lighten this one a little bit and thicken this bullish trend line, since this is what we are going to be using. So bringing back our candle chart right now, I'll just do some little readjustment here so that it can touch at least 3 weeks, and then we can have this situation going. So this bullish trend line will continue to guide our bullish momentum. So as long as price remain above the bullish trend line, we shall continue to hold on to a bullish bias here. But if price action takes us out of the buy position by breaking down the bullish trend line, then we want to be anticipating a selling opportunity below that structure. So this is how we are going to be trading the XAUUSD for today. Now, before I close this chart, I want us to run through the daily time frame of this chart to see what is going on there, and let's see if we are still in alignment with the holistic perspective on this chart. So right here on the daily time frame, our structures have not yet changed, as we still hold on to the ascending channel we identified last week. And one thing we noticed here, that we have a key structure at the 1,960 here, which was the first key level before the breakout that led into the testing of the $2,000 mark, which happened to be the first time price action will be getting into that area since the beginning of the week. And we acknowledged here yesterday the fact that price has been consolidating here, and this is more or less as a result of a psychological understanding that whenever price action founds a new high, it normally takes time for traders to participants to get acclimatized with that price level, and this will reflect on the charts in the form of consolidation phases, retracement phases, and we also want to be identifying the structures using our technical skills to anticipate a potential trading opportunity. And we said this yesterday that the structure here, the consolidation phase here, could likely turn into either a trend continuation pattern or a reversal pattern. So we could have price action breakdown, turning it into a retracement, or breakout of that structure and turning it into a trend continuation pattern. And to further emphasize what is really going on there, we scale down into the 4 hours time frame, where we begin to see things more clearly. And as you can see here, we saw a structure that looks more like a pennant pattern. And with the pennant pattern here, we either expect a breakout of that resistant line or a breakdown of that support line for trading opportunity. Though we had a breakout yesterday, but we were taken out of our position as this turned out to be a false breakdown. And right now it appears that price action is trying to break out of that resistant line of that ascending channel around this area. So we need to be very, very careful and look for further confirmation to be part of this trade. So scanning back into our 1 hour on our 30 minutes time frame here, let's hold on to the structure here as our guide. So you might want to screenshot my screen right now so that you can use it as a reference point when you're about to make your individual decision. So this is what we are going to be using to guide our trading activity for today. So that is it here. So we continue to look forward to buying opportunity above the 1,982, and if at any point in time a breakdown of the bullish trend line happens, a further breakdown of the 1,978 will be welcoming more sell position in this market. So let's keep this in mind and use it as a yardstick for our trading activity today. So that is that on the XAUUSD for today. If you have questions, let me know in the comment section below. Then yesterday we went on to talk about the GBPJPY, which was introduced to us by XAUUSD 77. I hope Ajawi is in the house. If you're around, let me know, and let me know how well your trade went yesterday on the GBPJPY. So let's quickly run through the GBPJPY here. So where is my GBPJPY? I think I placed it somewhere around here. Okay, so I saw a comment here talking about I saw Wasure is asking if I've done something on silver. No, not actually. I've not done anything on silver today, and silver is not part of the pairs we chose yesterday, so I'm not sure we are going to be choosing. Do you want me to trade silver? Let me know in the comment section if you want me to trade silver. If we have enough time, I would include it, don't worry. Alright, so on the GBPJPY this yesterday's session, this is what we saw here on the 1 hour time frame. And remember, we identified how price action has been playing out here since the beginning of this week. So we had the resistance line for this week at the 164.400 level, and we had the support line for this week at the 163.450 area. And during our live session yesterday, we were around here during the live session. If you remember, this was where we were around the 164.59 level. And I told us all that we have two structures that we shall be using to guide our trading activity. And one of the structure is the bullish trend line, which we identified on the 4 hours time frame. If you remember, if you don't, well, I will be taking you through the higher time frame one more time so that we can have a better understanding of what I'm talking about here. Then the second structure we identified yesterday was the 164.400 level, which happened to be the resistance line of that channel we identified at the beginning of the week. And during our live session yesterday, we spotted the breakout of the resistance line, which for us was a signal that we might be going bullish for this week. But one thing I stated here yesterday was the fact that if at any point in time we see price action break down the bullish trend line, we might be in for a selling opportunity. And I told us all yesterday that we shouldn't be eager to sell at that point. We are not having a sell stop order, as we still need some confirmation to happen on our lower time frame for us to be part of that move to the downside. And what I said here yesterday was that if at any point in time there happens to be a breakdown of that bullish trend line, we want to see price action come back to do a retest of structure. Then we see selling pressure below that area to join that decline to the downside. Well, some of us will have taken advantage of some sell momentum around that area, but it turned out that the sell momentum wasn't valid, and you must have been taken out of that position, probably in a loss, but it's okay. And I also told us yesterday that if we are going to be buying, we want to see price action take out the 165.200 level, which happened to be a strong selling niche in this market. So we saw the breakout of the 165.200 level this morning with a buy stop order above that area. I told us all yesterday to place a buy stop order around that area, and we had the buy stop trigger this morning, and since then price action has moved significantly well. And if you are part of this move, you would currently be running with over 100 pips in profit, which is not bad for the second day of the week. So well done to you if you are taking advantage of this, and kudos to you for being on standby to have caught that move. Now the next thing we want to be doing as usual is to secure this current position by moving your stop loss accordingly to lock in some profit. And if we look at the structure here, personally, since we are still at the beginning of the week, I would like to give some huge room for price action to breathe here. So I will be suggesting somewhere around the 165.500 level, which happens to be somewhere just right above the selling niche around this area. So around the 165.500 seems most appropriate to secure this current position. And some of us might have taken advantage of the bullish momentum from this area after sighting the higher lows here. So you might, if you are taking it from the 164.40 level, then you want to be placing your stop loss somewhere around this area. But if you are taking it from this area, I will be suggesting that you place it right around this area. Let's give room for price action to breathe. Now, another thing for us who have missed this opportunity this morning, well, it's not bad. It's not yet bad at all. We are still at the first couple of days of the beginning of the week, and there are still more opportunities to come. And from a technical standpoint, since we already witnessed the significant breakout of the 165.200 this morning, I'm of the opinion that price is likely going to be coming back to retest that structure for further confirmation. And if you look at this critically, it also shows a beautiful confluence with that bullish trend line that we identified on the 4 hours time frame yesterday. And if this happens, we want to be looking out for buying pressure around this area on our lower time frame to be part of the second wave of that bullish momentum to the upside. So we also want to be on standby to catch this move if this happens at any point in time. So this is what we are going to be looking forward to. So right now we have two key structures that will be guiding our trading activity for the rest of this week. Now the first one is the 165.200 level, where as long as price remain above the structure, we shall feel comfortable in our buy position, and we will continue to look out for more opportunities to add more position to our existing trade. And then the second structure here is the bullish trend line that we identified on the 4 hours time frame. Now, talking about the higher time frame here, and for the sake of clarity and for us to be on the same page, I would like to scale up into the 4 hours time frame so that I can explain to you the importance of the structure that we identified here yesterday. So look at the structure we have on the 4 hours time frame. If you remember, we identified this bullish trend line. So what I will be doing here is to bring out my line chart so that we can readjust this trend line to fit in and suit the current structure that we have here, as a lot has happened in the last 24 hours. So we need this trend line to connect the higher lows properly. So we have our candle chart back on, do some little readjustment, and we should be good to go with this. So we have this bullish trend line which has consistently been respected since the later part of the month of March last month. So we have this bullish trend line already, and we've already seen the breakout of the 165.200, which is a beautiful signal that we are going bullish for the later part of the week. So let's continue to monitor price action. If it does comes back into the structure, then we are good to add more position to our existing trade. And if we scale down to our lower time frame, let's go to the 15 minutes time frame for instance, and we see a trend continuation pattern around this area, then we might be into get ready to join a trend continuation to the upside. So a trend continuation might happen like this. We could see something like a bullish rectangular pattern where price action will start oscillating between the 166.400 level and the 166.00 area before a breakout retest happen. And if this happens, we want to be joining a trend continuation. So for the sake of clarity, let's identify the resistance line here, so that just in case this structure I'm about to figure out here is just in case price does not drop as far as the 165.200. So if it does start finding higher highs, we also want to be part of that move. So what I'm doing right now is to connect the resistance line of this channel, and then we identify a little bit. Okay, we have the 166.400 level figured out here. So we have the 166.400 level, place it at the top right hand side of our screen, and then I will reduce this one a little bit. Then let's find the support line, which will be falling somewhere just right around the 166. What a psychological level that is. Okay, we have that right there, bottom right hand side of our screen. Now here we go. So what I'm simply saying here is that if price does not drop down into the 165.200, but instead it start consolidating between this area, then it could turn out to be a trend continuation pattern when the breakout retest of the 166.400 level, after which we want to be part of that potential move to the upside. So please take this and put this in mind while we continue to monitor price action around this area. So you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this pair. So if a consolidation phase happens, we want to be having our buy stop order above the 166.400 area to join a trend continuation. But if price action drops below the 166.00 level here, selling pressure below the structure, then this might turn out to be a counter trend opportunity. Please remember, if you are not a scalper and you're not a counter trend trader, please pass this trade and wait at the bus stop here to look out for buying opportunity to join. But if you are a scalper, you are a counter trend trader, you might want to be part of that move all the way to the downside, and that will be giving you about 90 to 100 pips if price action does that. And please note that whenever you are taking a counter trend opportunity, you want to be on standby. You want to ensure you are moving your stop loss accordingly as price action moves in your favor. So that is that on the GBPJPY for today. I'm not sure AJAWI is around today because I didn't see his comment, but it's okay. I hope everyone understood what I just explained so far, and if you need me to make further clarifications, feel free to drop your enquiries in the comment section below. Now, since we still have some time, let's run through which pair was that? Someone introduced a pair to us here. Is it cast or okay? I think it's okay, I think it's cast, I guess. It's saying that we should do USDJPY. Alright, let me run through the USDJPY before we call it a day here. So on the USDJPY, I will just talk about the 1 hour time frame. I wouldn't be going into the higher time frame for the sake of time. And well, we personally, my team and I, we had a sell position on the USDJPY yesterday as we scooped in the sell position from the 133.400 as price action moved over 120 pips in our favor before we started seeing the buy pressure resume in this market. And one thing I would just like us to focus on for today is this channel here between the 132.850 level, which happens to be the resistance line of this channel, and the 132.500 level, which happens to be the support line for this channel. And one thing I stated here with my team is the fact that price has been consolidating between this area, and we need to be very, very careful at this point, as we need a strong confirmation to join any bullish momentum at this point. And the reason why I laid emphasis on this is because of what I saw here. If we take into consideration what happened since the midweek of last week's trading session, we saw how price has been bullish, respecting a bullish trend line here. And when I connected the series of higher lows, this was what I was able to identify in the last 1 week. However, during the course of yesterday's trading session, we saw the breakdown of that bullish trend line happen for the first time in 1 week, which for me is a signal that sellers are still very strong in this particular market. And if we look at the theoretical side of a breakdown of a structure, there is a likelihood that price action could come back, retest the structure that was broken, and then incite another wave of bearish momentum to the downside. And that is why I'm of the opinion that for us to be buying above the 132.850 here, we will need a significant confirmation. And this confirmation will come in the form of a significant breakout of structure. I don't want to be seeing something like a sharp rejection like this kind of candles I'm seeing here. If this continues, we are not going to be buying above the 132.850. So I want to see an engulfing candle break through that structure to the upside. Then I want to see a confirmation which will reflect on the chart has a retracement back into structure. This could happen on our 15 minutes time frame. Then I want to see some buy pressure resume above the 132.850 for me to be part of this bullish momentum to the upside. If this does not happen, I don't want to be part of any buy position here. Now, if this finally happens and price action continues to the upside above the 132.850, you will know that this is a counter trend opportunity. So as soon as price tests the bullish trend line that was broken yesterday, which also shares a confluence with the 133.400 level, which happened to be our first resistance line for this week, we want to be moving our stop loss to secure that position, as we need to be patient and see how price action will be reacting to the 133.400 level to decide if we are going to be adding more buy position to our existing trade or getting ready to join a decline, as that will have confirmed the retest of the structure that was broken to the downside. So if a breakout of the 133.40 happens, then we might be in for another wave of bullish momentum to the upside. But if it so happens that price action starts finding selling pressure below the 133.400, then we might be in for selling opportunities. So that is my view here. If price at all runs above the 132.850, but if that is not the case, and instead price continue to find lower lows and lower highs, then we should be having an opportunity to join the breakdown retest of the 132.500 level to the downside. So it's a very simple setup we have here on the USDJPY. So I hope that we be on standby to catch this move when it finally happens. So that is that on the USDJPY for today. I hope I made myself clear. Cast, are you in the house? If you are, let me know, and if you need me to make more clarification on whatever I've explained so far, feel free to drop your inquiries in the comment section. 603, I see you. Good morning to you, and glad to have you around. So with that being said here, I guess we call it a day at this point. And for the sake of those who are not part of the beginning of the live session, let's run through and do a quick recap of what we talked about today. So the first commodity we talked about today is the US oil, and I told you that we already have a buy position triggered here after price action broke out of the $80.50 level. And since the breakout of the $80.50 level, though we are profitable, we are still profitable on this one, but the bullish traction is not that convincing at this point, as we can see that sellers are still struggling with the buyers. There's still a tussle between the buyers and sellers, and the tussle is getting stronger with time. So at this point, what we did here to guide our trading activity for today was to identify and connect the series of higher lows, which gave us this bullish trend line that you can see on my screen. And what this simply means is that it will be guiding our trading activity today. So as long as price remain above the bullish trend line and the $80.50 level, we shall feel comfortable in our buy position. But if price action breaks down the bullish trend line, we have decided to sell the US oil with the hopes that price action is retracing back into structure in anticipation of another wave of bullish momentum. Then in addition to that perspective was the identification of the resistance line here at the $81.25 level, which you can see here. So in the last 5 hours in the market, we have been seeing selling pressure resume around that area. So we have decided here that if price action breaks out, retest the $81.25 level, taking out the sell positions here, we shall be in for another buy position in this market. So let's be on standby to catch this opportunity. So that is that on the US oil for today. Then we went on to talk about the US tech, which is on the profit side right now, as we finally saw price action break out of the resistance line of the channel we identified at the beginning of yesterday's live session. So with the breakout of one structure to structure here, we are of the opinion that price action will likely continue to the upside. So we have secured our positions here, and we hope that price action might likely come back and retest either the 13,190 for a trend continuation or the 13,150 for a trend continuation to the upside. So let's be on standby to catch that move. Then another thing about this current structure which I just noticed now is the fact that we have been seeing some rejection of the 13,225, which I want to label and acknowledge, as we might be using it as a yardstick for more trading opportunities in this market. So what I want to be seeing here is a breakout retest of that structure for another buy opportunity, for an opportunity to add more position to our existing trade here. So let's be on standby for that one too as well. So to make things easier, you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. Then we went on to talk about the XAUUSD, which we already have a simple setup here that we are going to be using to guide trading activity. And I told us all that we have a bullish trend line here and the 1982 level, which will be guiding our buy opportunity. So we have the bullish trend line, we have the 1982. So as long as price remain above the structure, will remain comfortable in our buy position. Then we also have a structure at the 1990, which happened to be the new resistant line for the week. As you can see, what happened around the 1990 level during the New York session yesterday. One thing I said here is a breakout retest of that structure will be welcoming more buying opportunity in this market. So on the XAUUSD, we remain bullish on this chart. And you all know that whenever we have a perspective, we also want to be taking into consideration the potentials of sellers also coming in this market. So if at any point in time we see this bullish trend line breach to the downside, followed by selling pressure below the structure, then we might be in for a momentum shift where a further breakdown of the 1978 will be welcoming more selling opportunities in this market. So let's keep this in mind too as well as we continue to monitor price action. Then we went on to talk about the GBPJPY, which was introduced to us by XAUUSD, who I don't think is the house right now. So we are profitable on this pair already, as we currently running with about 100 pips in profit as price action broke out of the 165.200 level. And I also said here that for those who had missed out on this opportunity, that there is still a chance that price could still break down the 166.00 level in the form of a retracement move, where price action coming back to retest structure that was broken during the early hours of today to inside another wave of bullish momentum. And I also said here that what happens if price does not find lower lows here, that is, price does not come to the downside but instead continue to find higher highs, then what we did here to guide our trading activity was to scale down to a much lower time frame where we identified this simple channel between the 166.400 and the 166.00 area. So I said price might likely transition into a trend continuation pattern where there is an indecision initially before the breakout of the 166.400 level will welcome a buy position in this market. So let's be on standby for this one too as well as we continue to monitor price action. And for those who are already in the current buy position that we are in right now, ensure that you have moved your stop loss to secure your current buy position. Then we went on to close the day with the USDJPY, which Cast told us to treat. And on this one, what we decided here is that we are going to be focusing on the channel between the 132.850 and the 132.500 area, where we have been witnessing a consolidation phase here. And what I said here is that I would only buy If price action breakout retest the structure, I see buy pressure above the 132.850. And if we are joining this bullish momentum, I told us all that we should be mindful of this bullish trend line that was broken yesterday, as we have a theoretical expectation that once price breaks down a structure, it might likely come back to retest the structure in anticipation of a bearish continuation. So if price action, if we buy above the 132.850 and price action continues into the structure, as soon as it tests the structure, we want to be moving our stop loss to secure the buy position, as whatever happens around this area will now determine if we are going to be adding more buy position or getting ready to sell. Then I also told us that we might be looking out for selling opportunities at the breakdown retest of the 132.500 level too as well. So let's screenshot this, use it as a reference point when you're about to make your individual decision on the USDJPY. So it's on this note I want to call it a day here. It has been a wonderful moment, and we were able to spot beautiful and promising setups that we can take advantage of during the New York session today. So I implore that we be on standby so that we can catch these moves. And you can also use your alert utility on your MT4 platform so that you can set a price level where the chart gives you an alert whenever price action gets into that level. So it's not all the time you sit on your screen to wait for the setups to happen. So you can just set a couple of alarms on this price level so that whenever price gets into that structure, you will be alerted, and you can now use the information you have gathered here to make your individual decision on this instrument. So thank you guys for watching, and for those who are joining us for the first time, I hope you had a wonderful day. But be rest assured that the more time you spend here, the more you get to understand how this works, and you will be able to use it to make your independent decision. So on this note, I wish you best of luck during the New York session today, and I wish you a wonderful day too as well. And I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the instruments we have been monitoring since the beginning of the week, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.